Taiwanese index is up 30 points.
It has the responsibility to restore price stability, and we just have to do it. That's the task we've been given under the law.
Adani Transmission as well as Adani Green, there's been an additional pledge creation. In Adani Transmission, there's 0.76% further creation of pledge, and this is again towards SBI Cap Trustee.
Grasim in its recent meet has clarified that this 10,000 crore includes paint capex for plant, working capital, branding as well as tinting machine costs.
ROA accretive given the fact that the merged entity could have a 20-30 basis point gain on the ROA.
The Nifty flitting between red and green. What's looking good is the mid-cap index, which is up almost about 75 points right now.
Own expectation from the BNP Paribas economists have gone up to about 5.75% as far as the terminal Fed rate is concerned.
We have been buying about 0.3 to 0.4 million meters per year from the market.
We are going to be incurring a capital expenditure of close to 4,500 crores over the next 4 years.
The Nifty is up 0.5%, but the mid-cap index is up 1.7%.
Hundreds of airplanes from Boeing, which we think and believe will lead to many more. Which will create many jobs here in India and many jobs back at home in the United States.
So down around 100 odd points.
Good afternoon. Welcome to Closing Bell, live from the CNBC TV 18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay. And in the newsroom, we've got Mangalam Malu joining in today. Hi Surbhi, hi Mangalam. Not quite the day we've gotten used to, right? Like every day there's been green on the screen. We start off the show by saying, look what a great market this is. It's been resilient. But today things have, taken a turn for the worse. We had a pretty okay start, flattish start. But thereafter, every 1 hour, every 2 hours, we've had some selling pressure. And the latest bout of selling pressure has taken the Nifty to that 17,600 mark, almost there. Though in the last 30 minutes, things have stabilized. So we are trying to defend 17,600. But it's a firmly lower session today. 3/4 of a percentage point gone in the benchmark indices. The Nifty down 132 points. The Sensex lower by 450 points. Mid-caps under pressure, down 1/3 of a percentage point, but relatively outperforming. And that's been the trend over the last couple of days. The advanced decline ratio has moved in favor of the losing side now. 1,500 stocks currently in the red. Well, there's only one sector which is in the green today, and that's the Nifty Metal Index. All the other sectors are under pressure, and the Nifty Metal Index is also holding up in the green by the skin of its teeth, just up close to about 0.1%. So the gainers list includes a few commodity names like Tata Steel and Hindalco. L&T has been doing well over the last 2 days. Today up 1.25%, adding on to the strength yesterday. Bharti Airtel higher by 1%. In the banking pack, it's largely red, but Axis Bank is holding up pretty firm. On the losing side, heavyweights, Reliance Industries, ITC, TCS are dragging their feet. Adani Group names have come in for some amount of profit booking. Pretty weak right now.
So, Reema, actually, I was smiling to myself when you said every day we come in and talk about a resilient market. It's actually all of 3 days, to be honest, because we've been in such a long slump. But yes, we had 3 good days. Now, what has happened today? Today's down move, the red candle, is almost as big as yesterday's red candle, but it hasn't entirely taken over yesterday's up move, which is why I'm watching out for yesterday's low very closely. Pull up the Nifty intraday. The low today is closer to 17,612. Yesterday's low was 17,602. So for me, one of the most critical watch points will be whether we will break yesterday's low to begin with. The lowest point of this downdraft obviously was 17,255. That's still a far cry from where we are. But the fact is that there's been momentum on the downside. Like there was momentum on the upside yesterday, today is a complete reversal in terms of sentiment. You've, of course, illustrated a lot of the factors and the moving stocks and the pieces of the puzzle here. I just want to go and take a global round check as well, because what's happening here is slightly worse than what we've seen in our neighborhood or what's happening in the European markets right now. Singapore, Hong Kong, these markets were down about 0.5%. Similar kind of moves playing out on the FTSE in the UK. Your CAC and DAX are down about 0.25%. So India is basically outperforming on the downside. And we are back to watching what we happily were choosing to ignore yesterday, which is that 10-year US yield and the dollar index. The yield touched 4%. Right now, just a shade below that number. The dollar index is very steady. It's not showing any decline, very comfortably above the 105.5 handle. So let's see how these two things move. That's the point, Mangalam. At least, I mean, Nigel and I were discussing this yesterday. I was like, listen, I'm holding my breath till this non-farm payrolls data is out, and then we can perhaps say whether we're comfortably past all the Fed fears or not. But I think the market's getting back in touch with that reality. Can't wish it away as easily as perhaps how we thought we could yesterday.
Well, that's the nature of the market, ain't it? It is interesting that the way we're selling off right now, it was an exact opposite of what happened yesterday. Yesterday, for most part, we consolidated. And the last hour, there was that massive swing on the upside. Today, it's the other side. It'll be interesting to see whether those who took, just the way those who took bullish positions in the last hour yesterday are actually having to unwind those positions right now. Will the reverse happen tomorrow as well or not? That's the kind of market that we're in right now. Virtually closer to yesterday's low as well, like Surabhi, you pointed out, 17,602. So let's see whether that breaks or not. But what's interesting is that we saw a lot of put writing yesterday. So a lot of people were hoping that, we find support at lower levels. And now those guys have been caught on the wrong side. So they're unwinding their positions. In the next half an hour or so, we will also have the weekly options expiry play out. And now call writers are extremely active. The 17,600 call, 17,650 call, as well as the 17,700 calls. All of them extremely active and seeing a fair amount of sell-off. In fact, 1.9 crore shares added to the 17,650 level for a premium of 4-5 rupees, telling you that if the market does hold above that 17,650 mark for a bit, there could be a case for further short covering. But until that happens, there is weakness. 17,700 call as well. The premium all but eroded out there. 1.4 crore shares added in open interest. That one, that place too. The other thing that really stands out is that all through today's trading session, for most part of the day, the advances line was above the declines line. But now as we speak, just in the last half an hour or so, those lines have intersected and the red line has come out on top. So we have more stocks declining, 1,600 stocks in the red on the NSE as against 1,250 in the green on the National Stock Exchange itself. So there you have it, the advanced decline lines up for you on the screen. So choppiness expected in the last hour of trade. How should you position yourself? We do have with us Kush Bora joining in with some closing strategies. Kush, good afternoon. This is a day so far belonging to the bears, closer to 17,600, which is yesterday's low. Do you think